Hey traders, welcome to a global macro update. Hopefully you're having a good Monday. We're going to start off this video looking at the economic calendar. There's not a whole lot for this week. We got some PMI numbers earlier on Tuesday. We did get some existing home sales today, which was lower than the forecasted 4.12 million. It was 3.91. Some interesting stuff for the interest rates for New Zealand on Tuesday, and then Thursday is going to be the big one for the GDP numbers for America for the first quarter. They are forecasting that it's going to be the same as the previous quarter of negative 5%. And we can see that right here. This is the potential forecasted, which is going to be the same as the previous time. And this was 2009, the financial crisis. And we can see that it was worse than the 5% that we are forecasting to see for this next upcoming GDP announcement. So we'll see how that goes. Also, I just wanted to read this. I was reading some stuff on Kitco, and I just thought this was a great paragraph. And it's by Michael Pinto. And it's talking about central banks and the situation that they're currently in, and they basically only have two options. So I'll read the paragraph first, and then we'll discuss a little bit, and then we'll continue on with the video. Therefore, in the not too distant future, central banks may have to decide whether to let inflation run wild on the back of absolutely unprecedented monetary and fiscal madness, which is bankrupt governments, unlimited QE, permanent ZIRP, which is zero interest rate policy, which will wipe out our starving standard of living, or progressively jack up interest rates and cut spending in dramatic fashion, which will obliterate the asset bubbles and the economy in the process. We saw this in the 70s, where they had to increase the interest rates substantially. They do talk about that within this article, which is a pretty interesting one. You can find it just by Googling it, but then we can see the effective federal funds rate, which is the interest rate, absolutely skyrocketed. It went to double digits back in the, looks like, mid-70s, and then we were at the peak of over 17.5% at the later half of the 1980s, it looks like there. So pretty unbelievable stuff. Or they just don't raise interest rates and let inflation take a toll and basically destroy the wealth of everyone within their economy. So it's a very difficult situation, obviously, but they put themselves in this really hard predicament. So we'll see how it goes, and we're going to be aware of the different opportunities that lie with each outcome or each potential pathway that the central banks really do end up picking. On to more of a crypto-related topic. This is still talking about global macro because this is extremely important. Understanding what company or what country will first have a central backed digital currency will be, in my opinion, very pivotal, because it's a big move. It is definitely a big move, and we see China taking the lead. Yes, America has been slowly discussing it, but China has been really pushing forward. So we'll look at this article here. A former senior official of the People's Bank of China said that the country has completed a back-end architecture development of its digital currency. With so many cryptocurrencies already in existence and in development, China is seeking to create payment infrastructure in which these currencies can coexist with sovereign digital currencies. According to Wang, this epidemic has increased competition in the digital currency space, with more tech giants and governments taking interest in creating a better digital payment infrastructure. He specifically noted the development of Libra, through which Facebook is trying social media-based digital wallets. This last paragraph I thought was pretty interesting. While everyone is still unsure of when China plans to officially release its digital currency, Ledger's Vault head Asia Pacific region Glenn Wu told Cointelegraph that the digital yuan will likely be the first state-backed virtual currency to launch worldwide. Obviously, this is an opinion. It's not a guaranteed fact until it actually happens, but to make that claim, he must have some level of confidence, obviously, in understanding that China is really progressive and aggressive when trying to create this new monetary policy of a central banked digital currency. Gonna get a little bit of water, and then we'll continue on for the last little discussion about the increase in COVID cases due to the opening of economies. So we can see in this article title, coronavirus case surge in US and Brazil, as Brazil and Germany reports more outbreaks, but markets don't seem worried. So there are more cases increasing because countries are opening up economies, letting barbers, basically the restaurants, things that were closed open, and this is causing more COVID cases, which obviously makes sense. But what I'm a little bit surprised about is we're actually seeing quite a bit of bullish momentum in the overall markets. I definitely thought that this would somewhat impact the economy in some case, but it definitely seems like the bulls are really not minding this increase in COVID cases, surprisingly, even though there's social unrest. But when we do look into the charts, we'll discuss what needs to happen in order for us to have more validation of an actual breakout to the upside. We do have some key resistances that we do need to break, but we'll get into that when we get right into the chart. So first thing we want to look at is going to be the S&P. I think that's a really good way to just generally know if we're potentially on a risk-off, risk-on sentiment, as well as it's a good way to understand where global investors are kind of at. In terms of the US, but also global, because a lot of people invest in the US who are not living in the United States. So let's go back to the daily chart and then zoom in from there. So we know that we've made a lower high, but we are holding a previous resistance that we can see on a smaller time frame. So we have a previous resistance which got broken by this extremely bullish candle with a long wick to the upside with increasing buy pressure, pushing the price up. You see small amounts of sell pressure compared to the buy pressure on the upside, and you see strong pushes. You do see quite a bit of wicks to the upside as the price was falling, but at the end of the day, the buyers were able to hold this strong level of support. And we can see when we go back to the previous time frames, it was a previous support before we had a huge push to the upside. And then the main zone that we do want to be looking at is going to be that 2970 zone before I really look to have any major exposure in the S&P, at least to the downside. So we're now going to get into the 6-hour time frame and discuss what we currently see. Let's go back to the daily and just discuss this expansion. We got an expansion in volatility. We are seeing increasing volatility where you see tight ranges, and as the expansion gets wider and progressively larger, you're seeing larger swings of series of higher highs and higher lows, but it does look like we're increasing in volatility. As we get deeper into this, could have an actual move to the upside with the blow off top if this continues, but obviously this trend is still moving pretty strong. I don't want to go in front of a steamroller in my personal belief in terms of looking for shorts just yet because we don't have confirmation. The confirmation, for me at least, is the 2960-ish range. We can see right here, that would be the horizontal zone the price would need to pass in order for me to really look at some opportunities for some short exposure for swing trades. But in the short term, we do have a bit of a descending channel. You can just go like this and it's a descending channel, but it's a little bit of an expanding price action pattern. But the main zone that I do want to see break potentially for a bullish breakout is this descending resistance. You see that there is a type A, which is a candle closure, a candle wick touching that zone, and then this is a type B, which is a candle closure touching that zone, and this is a type B, which is the anchor point. So you have 3 valid zones where this has rejected, and then we're coming on to the 4th zone. We did see the price hold the previous resistance. We can see very well and clearly on the 1-hour chart. Strong level of resistance indicated on the chart where you see an ascending triangle right here. Break to the upside, you can see that that was the new resistance. Pushed above it, and we held that for a new level of support multiple times. So right now, in my view, we are just in a consolidation sideways. Let's get our snip right here, where we do see that there is a series of lower highs right here. This is the first high, and then lower high, and then we just draw in a trend line. We're testing this next high right here, and then the run up to it has been pretty aggressive, where we tested this previous support right here, which was also a resistance indicated right there, and we actually held it. Even though the price did push down initially, the buyers were able to push the price right back up, because we can see that the actual body of the candle closed within the support zone, this descending support zone, and then just the wick protruded below that demand area. Once that candle closed, we got a strong push to the upside with a series of higher lows and higher highs, and progressively higher highs, which showed me that there's buyers and bids who are pushing the price back up, really wanting to get into the market. But I don't want to call it extremely bullish or anything just yet until we see a break of this zone. So right now, I'm currently seeing this as a potential either market accumulation phase or distribution phase. This is currently a descending channel that I currently see, and then this is the mid-range zone that I see. And if we break to the upside, we'd be looking for a retest of this zone like so, and then if it breaks to the downside, we'd be looking for an initial break in this ascending zone, which we can see a little bit more clear on the 1 hour chart, because right now we do have a squeeze between the resistance zone at the top connecting the higher or the lower highs. Let's just get the mouse again, and then we're looking to see either this zone break right here or this zone break right here, because we do see an anchor point 1, 2. With the anchor point is 3 valid rejections, which in my opinion and in my strategy is enough to consider it a valid trend line to use. So right now we're in a squeeze. We're looking to see if it's going to break to the upside or to the downside, and that will initiate the next potential trade that we're going to be looking into. But right now we're just squeezing, and it does look like we are making a strong push to the upside. That's why we're seeing BTC move to the upside, in my opinion, as well. Overall, it does look slightly more bullish, but just in terms of the S&P, I do not think I want to get too bullish until we break that zone. But in terms of the smaller term price action, obviously we're making stronger moves to the upside. This candle really signifies lots of buyers coming into the market after we broke our nice ascending triangle right there. So we're making a bullish push. This area right here would be the TP that you're looking for, which would be in confluence within the series of lower highs. So this is our next, you could say, battle zone or zone of sensitivity, where there is going to be some level of buy pressure and sell pressure interacting together. That's going to make the price either move to the upside or to the downside. So that's going to be the next big play for us on the S&P, which will then drive the overall sentiment within the market. Next thing we're going to quickly look at is the Russell 2000. It still has not broken the right shoulder potential. We actually got a really nice wick to validate this resistance zone, which was, we can see, a previous resistance zone, and this is the head. So as long as it sits below that 1450 range, this potential head and shoulders is still in play. And then we do see the series of higher lows connected by this ascending trend line. So then we're going to get an ascending triangle pattern here forming, and if we do break to the downside, breaking the support, we're looking for a nice retest. Let's just draw this just so we know as an example of what we're looking for. We're looking for pretty specific situations where we want to see initially this ascending zone break to the downside, where you want to see it consolidate even further, and this low will ideally be a lower low than the low that was held on this support zone. So that will break the market structure, and then you're looking for validations of that support new level of resistance. So you're looking for the completion, because the market moves in waves. You're looking for not the entry at the bottom of the wave. You're looking for the entry before the next impulse push to the downside, and that is what you're looking for. Push to the downside, pull back, and then once you see wicks, once you see bearish engulfing candles, once you see indications there is sell pressure, injections of sellers coming into the market in our zone of sensitivity, that is where we want to be looking for potential opportunities. Because if we are going to see any sell pressure come in to the market in the S&P. The Russell 2000 will definitely see a lot more of a drop compared to the S&P because this is a small cap, more speculative investment instrument, whatever you want to call it. So that's going to be my play on it. I'm going to stick and stay patient with it. No real action taken just yet on it. Nasdaq has broken yesterday's high. It closed pretty bearish yesterday, but we got the bulls to basically close it right at the high of the day, which is extremely bullish. It has yet to break the previous high on June 10th, but that candle closure for me definitely shows that we could see some more buy pressure coming into the market. We can see right here, previous candles closing very high to the daily high is extremely bullish. If we see a lot of retracement, that means that sellers were able to hammer back the price near to the open. We can see right here, yes, the day was bullish the next day, but on average, you're not wanting to see long wicks to the upside. You're wanting to see the candle close near the high or at the high in order for us to validate a potential next bullish day on the daily or 12 hours. So overall, Nasdaq looks pretty bullish. Quick look at the VIX. It is slowly dropping. We do have a nice little support here at around 31. This is just for the S&P 500. You can actually use VIX like as an instrument using VIXI or TVIX, but it is pretty volatile, just saying. So we do have a resistance here, which is going to be our current level of support at around $31. If we do fall below that zone, definitely going to be a risk on sentiment. 9 times 9.995 were very high amounts of the time, if not always, when the volatility is decreasing. It's a risk on sentiment, and when volatility is increasing, it's a risk off sentiment. Usually people flee from stocks. Crypto is, in my opinion, still a risk on asset. It is not correlated with things like the US dollar, treasuries, which are bonds, or gold yet. I do think that cryptocurrencies, BTC, will slowly come into play where it's going to be a safe haven, but as of right now, it is still a speculative investment that has higher positive correlations with traditional indexes like Dow Jones, Russell 2000, and the S&P. So it's a risk on asset in my point of view. All right, so that's going to be the volatility index. We got Nasdaq, so we covered the US equities, so we're going to quickly cover the global equities here. We got the FTSE 100, which is the UK. I'm going to get a quick bit of water and then let's continue on. All right, so this is the first index that we're going to be looking at. This is the FTSE 100, which is UK's index. We're creating an ascending channel here. We got a nice series of higher lows and higher highs. We're about at the midway point. We haven't been extremely well. We did have a red day today, but overall we're making higher highs and higher lows. The main zone that, in my opinion, is a key area of significance is around, let's say, 6,100 for the UKX, which is the index of the FTSE 100. And as of right now, it does look like we are forming a bit of a lower high, but obviously this could be a consolidation zone. We can zoom in and see that we are holding the previous resistance. We can see right here as a new level of support. So in terms of the market structure, when you actually get granular in the detail of the time frames, we can see that it is still moving in a upward trajectory, forming higher highs and higher lows. We even, when we're looking at the 1 hour time frame, see that we have been making a higher high previous to that high, and we've been able to hold some higher lows. So overall, it does look pretty bullish. Yes, it's a little bit of a consolidation, but buyers are definitely beating the sellers in this current market. So now let's go to a different index. We're now going to go to the Japanese stock market, the Nikkei 225. And it gapped up. It's actually currently running right now. I'm in the PST, so Pacific Standard Time, on the West Coast. But it does look like the Japanese stock market is currently running, and it did gap up, so it's looking pretty bullish over on the East Coast, or Australia, Japanese time, somewhere around there, wherever you are living. So it's looking pretty bullish. A little bit surprising because we did have more COVID cases over the weekend, but markets generally seem unfazed. It looks like global investors are still having a pretty high tolerance to risk. They don't mind speculative investments to gain a higher ROI and not running to investments and trading things like low yielding bonds and gold that doesn't really give you any sort of dividend or any sort of cash flow, but is a good way of storing value over a long period of time. We're not really seeing that just yet. Australian stock market did gap up, but holding resistance, consolidating, not really doing a whole lot. And then the Canadian stock market, the TSX, has just been consolidating within a range, not really been doing a whole lot. So that's going to be the overall structure in terms of the global equities. And we are going to now go to a little bit of oil, both Brent and WTI, which is Western Texas Intermediate. And then we're also going to be looking at some bonds, just some U.S. bonds, the 10-year and 30-year yields. But first, we're going to discuss the WTI crude oil. We did make a new high. So let's go to the daily chart. We actually made an unbelievable recovery here from that huge event that occurred where futures price for gold went to negative, as well as some actual physical deliveries and stuff actually went negative, which is unbelievable. But it's recovered. We're above $40 now, and we broke above the previous high. So the double top is now invalid. We're making strong, higher lows and higher highs, and it looks really bullish, pretty unbelievable. I definitely think that it would not rebound this quickly, but we do see that despite the quick reopening that some people might have hoped, and with that would be an increase in transportation, production, increase in oil consumption. You're not really seeing that to the speed in which the buyers and bulls would like, I'm sure. You're still seeing the price and the demand for oil go up pretty aggressively to the upside. So in terms of odd New Zealand CAD, that is pretty bullish. Usually the price of those currencies, Australian dollar, New Zealand dollar, Canadian dollar, is positively correlated to crude oil. So we can see in the FX realm, those currencies are doing pretty damn well. Canadian dollar, not so much, but Aussie and the Kiwi have been doing extremely well. And we can see that it made a new high. I was looking at this as a potential ascending triangle here, and if it does pull back and we get a wick on the daily, that could still be in play. But if it does make a higher high, that's not the worst case in the world because we're still making higher highs, although that would be a marginally higher high, which isn't great to see. We could be forming an ascending wedge or something along the lines of that, but we'll take it day by day. And as of right now, we just made a pretty bullish move, breaking the previous high, and Brent has a very similar situation. Did not break the high yet, but obviously they're pretty damn correlated, so that's going to be the discussion for both of them. We do see the bonds now talking about the US 10-year and 30-year yields. So basically, when you see yields go down, people are buying bonds. It takes less yield in order to incentivize investors to purchase bonds to get a low yield of what is currently 0.7% for 10 years, and for 30 years 1.47%. And if bond yields are going up, it is requiring more yield in order to incentivize investors to invest. So that's kind of the balance how to do it. And we do see it is holding that zone. If we do get a huge move to the downside, it means that there's going to be a lot of people running into bonds. So you don't want to see this confluence zone break if you are a bull. If you see this plummet to the downside, that means that people are going into bonds, probably out of equities, out of risk on instruments and assets, which if you are a bull would not be a positive thing. So as of right now, we're holding, we're consolidating. Not a whole lot has happened within the bond market in terms of the yields, but it's always good to understand what they are doing. All right, now we're going to get into gold and silver. So let's go to the daily chart. We did say how we really would like a daily candle to close above this 1745 level, which we did see a huge rejection on, and it was a nice potential for either a, in my opinion, a volume distribution phase or a volume accumulation phase. And there was a little bit of worry when we were getting deeper into the support zone. That it was a pretty risk-on sentiment at that time, and it still is. Doesn't mean that equities and gold can't rise at the same time. They totally can. But in terms of a risk-on, risk-off sentiment, usually if there's a huge bull run in equities, people aren't going to be running into gold as well. If you look at the dot-com boom, gold was at an all-time low. 2008 happened. Gold did increase while stocks were increasing at the later point in time, but at the later half of that, gold started actually really taking a massive bearish turn to the downside back in 2011, and that's when the stock market really started to boom from 2011, 2012 until around, well, I guess it's still booming now if you look at the Nasdaq, but usually they're negatively correlated, so either people are going into gold or people are going into equities. So that's just the way I view it. And it does look like we are getting a little bit of a bump from gold, but I'd like to see the stock market not do so well before I get extremely bullish on gold. They can both come together at the same time to an upward momentum. That's totally a plausible situation. And this candle closure on a larger time frame, I think even on a 12-hour I held right there. I don't love it, but if we are looking at the structure on the run-up to the break of this, it's very different than what we saw in the previous attempt to break this 1755-ish zone. So in the previous run-up, this was the zone right there. We did break, but we failed to hit that target, which was around 1800. That's my target for the bullish move that could come for gold, and then we failed to make that target. And then once we started seeing this, it was not looking great. Our main support was around 1680, like we can see at this zone here. It held, which was great, and then we started seeing some higher lows come in, which was a pretty good sign. I enjoyed to see that. I was a little bit hesitant when this broke within this range because it was still not really seeing the bids to push the price up. Really, it was consolidating, and until we broke this zone right here, I was a little bit hesitant on gold. But at this point right now, it does look like it's consolidating, and overall we're making higher lows. We can zoom in on a smaller time frame, and it does look like it is creating a potential ascending triangle. I think if it does hold this higher low and create an ascending triangle, break to the upside on the 1 hour time frame, it's really, really well respected. Let's just make this a actual line like so. We can see that a little bit more clear. If it's able to hold that higher low from this low and then break to the upside, retest that previous resistance as a new level of support, I think that would be a phenomenal opportunity for gold for a long, with a target around 1790 to 1800, right around there. So you're looking at some great risk reward parameters, and that would be an opportunity, I think, even if the market does go up or down, unless there's a major liquidation event. I think that gold overall is pretty uncorrelated with the market as of right now. The market, especially equities, is, in my opinion, in another world. Not really following economic data that's coming out. Initial job loss claims were absolutely terrible, and the market was exploding to the upside. It just did not make sense for a lot of the time, but really made me realize that the equities market is not a representation of the true economy at all. So that is the analysis on gold. I think that price action pattern will be very valid and will be pretty awesome if we do get that higher low to hold and we break that resistance, retest it. Once that retest is in, I think that's going to be the area to potentially pull the trigger. Silver also is looking a little bit more bullish here. We did get a break of this resistance, and then we are holding the previous resistance as a new level of support in confluence with the descending resistance, which is now going to be a new level of support as well. So overall, we do have a lot of demand right around here, which it does look like we are holding. A decent bearish candle, a pretty aggressive bearish engulfing candle, which was on June 22nd on the 2-hour, is looking like it is holding. And overall, we will need to see gold continue to go up, making higher highs and higher lows if we do want to see silver move up as well. But overall, it does look like this squeeze of this series of higher lows and lower highs is coming to an end, where the buyers are winning the battle and are able to push the price up. And then if we're just looking at potential next areas of significance, we would be looking at some potential geometry in line with some previous levels of either resistance and support. So I think 18.5 is going to be a pretty important zone, 18.5 or 18.6, and we can see the next area is going to be around $19 for the next main zone as a psychological level, as well as a pretty important zone within the price action. But we can look at the daily chart if we really want to get nitty gritty, but I'm just going to give you my analysis on the next. I'm going to do another global macro update probably on Wednesday or Thursday, so obviously we don't need to be looking at the weekly and daily every single day. But that's going to be my analysis of silver. It does look pretty good. As long as it's holding that level of support, it does look pretty bullish. Although, like I said before, gold does need to hold that ascending trend line and that ascending triangle in order for silver to actually go up. But silver does look pretty good, and it does look like it's in a potential breakout zone where it's held that previous resistance for a new level of support. In terms of the gold and silver ratio, if this lower high does hold, and it does look like it is because we do see some wicks to the upside, it does look like there's a lot of wicks to the downside as well. But if this lower high does hold and we get another move to the downside, I think that the overall metals market will see a bump up. It's just silver will just see more appreciation compared to gold. Doesn't mean that gold won't be a good trade. It could be a great trade. It just means that silver will probably be moving and gaining more in the current price. Basically, I'm gonna need a little bit of water. My mouth is super dry. All right, so let's quickly go to the comments. Going to go and get the comments on YouTube and see if there anything is, and then also going to be looking at the TikTok comments. So I'll be going over those quickly, and then I will continue on with the analysis, looking at some stuff in the realm of crypto. So let's just quickly go here with what cryptocurrency. So we're mainly looking at BTC right now. We'll look at the total too, which is the altcoin market cap, which is a good representation of the overall altcoin market because it is excluding Bitcoin. So that's mainly what we're going to be going over in terms of the alts. Hi, say hi, Jordan. What's up? PayPal going into crypto. Let's go. Yeah, that's awesome. I'm extremely hyped about that. Nerman. Hi. All right, yeah. So I definitely think that PayPal going into crypto is an extremely positive thing for sure. So with that said, let's now actually talk about BTC. It does look like it's really seeing a huge bullish push. Well, not huge, but a significant bullish push, because we do see significant bullish volume and increasing bullish volume coming into the market with our average Bitcoin volume indicator. And if we just go on to a larger time frame, because we do like to see charts on large time frames and then zoom in. This is the 6-hour chart. This is that descending wedge that broke out to the upside, and it looks like we could get a nice pullback on this previous resistance, which is going to be a new level of support. Would not be a bad situation to be looking for a potential short-term entry if you are looking for a day trade, but you got some hefty resistance here at the 9,900 zone if it does even reach the 1.2K zone. I think If you're not in it now, it might be a little late if you're entering FOMO in here. If you get and wait for the retest and you're able to have a pretty tight stop loss, you could be looking at it as a decent trade if you are a little bit leveraged up. Obviously be responsible with it, but in terms of larger swing trades, I think this is definitely not going to be a long that is going to really extend, because we've seen how aggressive the sellers have been on the $9,900 zone up to the 10K or 10.2-ish K zone. Those are going to be major supply zones that we've seen in the overall price, and we do see that there's a squeeze from this a series of higher lows and this descending wedge, which is then breaking to the upside. It is in the same direction as this ascending trend line, but overall this major supply zone is holding the price, creating either a horizontal zone or a descending zone, but I don't think we're going to get really a higher high within this consolidation. I think the still higher probability situation is for us to hit this around 99 to, let's say, 10K zone, and then have quite a bit of resistance, and then potentially fall to the downside, in my personal belief. And then we'll even go to the daily. And I could be very well wrong. This could be the potential breakout that we're looking for. And if I am proven wrong, and if it does break and hold this zone, I'm very alright to call myself wrong and for me to basically change my bias. But as of right now, the potential for what looks like a potential head and shoulders is still in play at the $9,900 zone. So there's a positive correlation within traditional markets and BTC. So usually what the equities market does, mainly the S&P, will be somewhat reflective of what Bitcoin will be doing. We saw a pretty big pop recently within the equities market. Bitcoin made a strong push to the upside as well. So that's why we try to understand what's happening within the equities market as well as the cryptocurrency market, because there are correlations and relationships that assets that don't seem too correlated have with each other. So that's going to be the larger time frame on BTC, and then the smaller time frame, I think the path of least resistance, just the initial move that it is currently carrying in its momentum, will continue around, like I said, the $9,900 zone. So it looks pretty bullish as of now until we get to that zone, and that's our next major battle zone that we will need to pass if the bulls do want to continue the move to the upside. Quick look at the total too, which is the altcoin market cap. We saw that overall altcoins did move to the upside, gaining market cap, and we do have a key level of resistance at around 95 billion in the market cap. And if we go back to the 2-day, we can see that we are forming a pretty good squeeze. So even on just looking at the altcoin market, we can see that we're near a high, consolidating, made a marginally higher high, holding a support which does look well respected. But if this does break to the downside, breaking the current support that we see within the total 2, that definitely looks like a potential head and shoulders, which we saw right here on a smaller time frame. And then we'd be looking to see if we can short some alts if this does reverse. If it does hold this 86 billion level for support, and then it breaks the resistance that we can see right here, and it continues chugging towards the upside, that definitely could be an indication that my thesis is wrong. I do need to be recalculating my analysis, and we got to be looking more bullish in BTC. But as of right now, in the short term, yes, it does look bullish, but that 10K, 9.9K zone is got to be a very important level to understand where supply is going to be located for anyone in the crypto sector. So let's get the 6-hour chart here. And then we're now going to quickly, I believe, look at the comments and see what else we have. And then I think that's going to be it for the global macro update, along with the crypto market update. it's a general understanding of risk off, risk on sentiment when we're looking at the equities market, when we're looking at bonds, oil, the volatility index. All that stuff is useful in order to understand if we are in a risk on or risk off sentiment. And with that analysis and knowledge, we can then make our trade ideas based off of our global investors having a higher risk appetite or a lower risk appetite compared to historic times. And that's what we're trying to understand basically with that. So thank you very much for watching. We appreciate it. I will be closing the recording, but I will continue the lives for YouTube as well as TikTok, so then I can answer any questions as well. So thank you very much for watching. Really appreciate it. If you have any questions, drop them in the comment section below, and we will be answering all questions. So until next time, have a good one, and happy trading for the rest of this trading week.